Traders are now expecting a potential rate cut at the end of January by the Fed. However, we saw a mixed jobs report come out after the CPI inflation data came out cool, and the market is basically flat, trading at 592.16. However, we did break back into this diamond pattern and are holding it right now, fighting resistance at 594 on the SPY. I don't know how I didn't see this earlier, and I apologize to you guys, but let's take a look back at January 2021, assuming this is a potential requel, and then I need to talk about the COVID crash. So we did see a sell-off in January of 2021 as GameStop and AMC actually squoze higher, but we didn't break the October low from 2020. This is actually the same thing that happened. We got this sell-off in January and we didn't actually break the October low from 2024. Now, we do still have some time left for January, and we coincidentally have a Fed meeting lining up at the end of January. So is this the bottom? Well, we're going to talk about it. I need all the GameStop shareholders to understand something. It is very, very, very unlikely that the SPY holds up and gets to all-time highs. If you believe that GameStop and AMC are going to have some catastrophic mother of all short squeezes, if you don't think that they're going to top out and we're going to have a controlled squeeze that is very minimal, then that's okay. The SPY is likely to rally. However, the liquidity needed for GameStop and AMC to get the prices that you are waiting for them to get to during a MOAS does not mean that the SPY is going to reach all-time highs. It just cannot happen, in my personal opinion. So what am I trying to get at here? I'm trying to get at that you are likely to see the SPY bottom out or at least have a flash crash down during AMC and GameStop rallying higher. Now, if you come and you take a look back during the COVID crash, you can see a little bit of a wonky January right here. We hit this low and then late January, we decided to melt higher, right? Which we could potentially have a Fed meeting melt up and then crash into late February, or we could crash during that Fed meeting as we melt up higher right now into the end of January. Now, you might be saying, Lottery Stocks, this was because of COVID, right? There's no actual black swan event for that. COVID was just a excuse for this crash downwards. This was actually a crisis that had to do in the background with the banks. And that is exactly what we're seeing right now. We are seeing some people post some historical patterns lining up with several recession indicators stating that we will rally into the next couple of weeks and then crash at the end of January, which is something that I also called out for. Now, housing defaults have skyrocketed, which is unlike anything we've seen in a little bit. On top of housing defaults skyrocketing, mortgage demand in the US has fallen to its lowest level since 1995. Now, what does that mean? That means people are giving up on their house journey. Home buyers are officially not purchasing homes, right? It's getting very, very hard. But on top of that, homeowners who already own homes are defaulting on their loans. Something similar that we seen to 2008 financial crisis, but not exact and also not to the same degree. However, with these things lining up, a decrease in consumer spending could lead to tightening in the overall stock market. On top of that, we've seen a measly 5% correction right now in the SPY, even with all the recession indicators that have popped up. If things keep going in the direction that they are going, banks could actually need to, let's just say, do something with bonds as well as something in the equities markets that you saw during the COVID crash. This also lines up with the 4-year cycle of a lot of contracts, swaps, and things that are dated to run through another cycle. So what does this mean? Is the market going to flash crash? Well, nobody really knows. But personally, the way the market is set up, I don't see necessarily a trade on the SPY that is low risk. Right now, assuming there is going to be melt up and bullish momentum leading into 2025, here's what you could see. You're going to see the SPY break to the upside out of this diamond pattern and come up to 606. You're then going to see a hard rejection at 606, a retest on 585, and then a bounce back to 610, which is the highs of the SPY, a retrace down to 598, build a base there, and then a rally up to 623 to 627.90. Okay, this is my bullish outlook on the SPY. However, on the other side of things, what you could see going forward is either a crash during the very, very beginning of February or a crash mid-March. These are the two time frames that I'm looking for. So end of January when that Fed meeting is, or mid-March. Okay, so that is what I am looking for on the SPY, and that is my coverage on the SPY. Moving into AMC, we got this perfect bounce, which we called out yesterday, but is the sell-off over? Potentially, potentially not. I said that coming into Monday, the 21st of January, I expect AMC to have this gap higher, which as of right now, it's trading like that is likely going to be the case. Here's what I see. This red arrow is pointing to where I think we are at on AMC. I covered exactly everything in yesterday's video as to where and why we are here. Now we got this slight gap higher right here, but nothing significant, right? And then you're going to retrace slightly, gap up on Monday, and that is still what I'm expecting. Retrace slightly, maybe down to 350. Once again, gap Monday. Okay, so that is what I'm expecting for AMC. What happens after that? Well, you gap higher, you retrace for the week, you consolidate, then the week after you actually start the squeeze. So what would that look like on AMC? Okay, start Monday, you go through the week, and then Monday, January 27th, you start the squeeze. Okay, so that is what we were looking for. Coincidentally, previously, when the SPY actually, when GameStop actually rallied and AMC rallied, SPY hit a bottom. Okay, the same day they hit their highs, the 28th to the 29th, SPY bottomed out a little bit. Coincidentally, if they start squeezing on the 27th and the Fed meeting is late January, which is causing uncertainty for the market, especially in my opinion. There's mixed signals, even though people are saying they expect a rate cut or a pause or something along the lines of that. If the Fed comes out and they raise rates, it's going to go down. Okay, it's going to be a flash down while these things are squeezing, and you need liquidity for a major squeeze. Like I said before, GameStop, this is what GameStop is trading at right now, 27.87. Really quick, guys, I just want to thank you for 31,000 subscribers. I really appreciate it. I've been trying to get the 50% of people who come to my channel day in and day out to subscribe, but they haven't, and now people are finally starting to subscribe. So if that is you, make sure to press that subscribe button so we can get to 50,000 very, very soon. Okay, this is where GameStop is trading at right now. You saw this top November 26th to 27th, and then December 23rd or so, same time frame, 26, whatever, at the beginning of that week. GameStop, same thing. Everything matches up, peak, peak. So where are we trading at right now? Well, we got this sell-off, which was a 23% sell-off from the peak. If GameStop saw the same thing, we are actually not at that degree yet, but a 23% sell-off would be $26.50, which is also some support down here. Okay, so GameStop, in my opinion, can come down to 27 to 26.50 before getting that moon higher. And I do still think, like I said before on AMC, that moon higher on GameStop is going to be Monday. Okay, so that is what I am watching for. Put very simply, it's getting a very, very similar sell-off at the end of this cycle, right after the similar peaks, parallel channel. Everything is lining up. That would also be a bounce beneath this channel, and it could fake out paper hands if we saw a wick beneath this ascending parallel channel. And just like you saw back here in October, right? Late October. Okay, so that is my coverage there. Now, Citadel just sold 1 billion of bonds to fund payout to owners. At least they say. What's interesting about this is there's two scenarios here with Citadel, right? Why would they raise $1 billion worth of bonds? Basically, Citadel is selling bonds to get $1 billion in cash, stating that they will pay these back at a later date. Now, either they have a major investment opportunity where they are going to pay out their customers, or they're going to make a killing on this throughout 2025, 2026, or they need liquidity. And based on market conditions, I don't see major direction for Citadel to use this $1 billion on. In my opinion, it looks like they need liquidity. However, this could be wrong. They could have insider information and they could be putting it somewhere else. But again, if Citadel ended up defaulting on their bonds that they issued, this is going to collapse a major player, and it's going to further kick the dominoes down the road and affect everything. On top of that, Big Pult, which you have maybe known as an avid GameStop investor over on X, has been selected by President Donald Trump as the new director of the Federal Housing Finance Agency, which could have an indirect impact on GameStop's stock price over the future term. But overall, this is, in my opinion, a good thing, right? Trump also said to be receptive to the idea of reserve cryptocurrencies found in the USA, which leads us into Bitcoin, right here. In case you haven't seen it before, I brought it up before. Bitcoin power law corridor. In this green zone is the ideal price to purchase Bitcoin. The best price is beneath the purple line, which is, put very simply, you enter the bull market, the bull cycle, and you have a major rally into the red zone on Bitcoin, which at any point is an okay time to sell. Nothing I say is financial advice. I'm not a financial advisor, but here we have diminishing returns. Bitcoin from the top of the green part of the cycle to the red part of the cycle when you enter a bull cycle back in 2017, then back in 2021, and now where we are at now, potentially entering another bull cycle. We had a 700% gain, a 292% gain. With that diminishing return, you should technically, theoretically, have a 114% gain from where we're trading at right now. Now, that does not seem like much. However, that would put Bitcoin all the way up to about $213,000 to $220,000 a share. And okay, if you take a look at how long this actually took, right, from the breakout to the peak, this was about 140 days to 147 days. This was about 120 days. So theoretically, where we are getting this breakout, we could see Bitcoin by May of 2025 reach upwards of 200,000 as long as a market collapse does not occur. In fact, if banks actually collapse and these major funds actually collapse, maybe Bitcoin does have a move higher. But you have to remember, if they need liquidity, Bitcoin is actually held majority by these institutions, and you will likely see a major plummet over there. Now, XRP just surpassed a $190 billion market cap. This thing is on an absolute rampage, trading at $3.36, was up higher than this before. This is insane. At no point did anybody who has heard the XRP community over the past 5 years say, you know, this thing's going to $5, even believe them even a little bit. And now this thing is above $3 a share. We are lucky we saw this move because the pattern that XRP was playing out on fading volume looked bearish on the weekly chart, but we blew past $2.96, which was a level that we really wanted to be above, which I called out for. And now we are above that, going to be closing above that, opening above that, building new candles, building new trends. And now we have room to rally up to, my opinion, $4.68, which is a 40% upside from where XRP is trading at right now. But watch for rejections on this ascending trend line right here, which is going to be $3.48, $3.50. Then it's going to slowly bring us more and more resistance into late January to try and keep us sub $4, right? At this level of increase, you could see a top of $4 at the very end of January, and that could potentially be the top depending on what happens with the market. So we are going to be watching that from there. However, based on everything going into a potential bull market, this is what Dogecoin is doing. This is the 2021 cycle. It's looking very, very similar. Everything is looking exact. February 20th to March 8th is when Dogecoin, in my opinion, will hit above 75 cents. And that is my projection for Dogecoin. I just want to say that these memes will end up following. When? Who knows, right? But this is a 92% gain, which in my opinion is more of a gain than XRP will see over the next month or two, or the identical. Okay, I think XRP could come to $6.35 all the way potentially to $7.40 this cycle around as my potential top this cycle. MicroStrategy got a break out of this flag, but it is really fighting resistance at 362. We saw a little bit higher volume on this break higher, and now XRP is kind of fighting right here. I'm sorry, MSTR. I don't know why I keep saying XRP. But MSTR, MicroStrategy, I think people are finally realizing that Bitcoin needs to make a serious move for investors to actually be bullish on this. If Bitcoin smashes above 110K by its all-time highs, then you are going to see MicroStrategy likely come back and retest 455 very soon. Tesla, I want to talk about Tesla very briefly. A lot of stocks are doing this, breaking out of their wedge, making a higher high, higher low, building a bullish trend going forward. But Wells Fargo apparently thinks that Tesla is going to plunge nearly 70% for some odd reason. Taiwan Semiconductor, TSM, just reported earnings, profit jumping over 57% to record on strong demand for AI chips. TSMC's main customers include AMD, Nvidia, Qualcomm, Intel, Apple, and Broadcom. Last but not least, I want to give you a potential short squeeze play to put on your list, which is Root, ticker symbol ROOT, trading at $88.32, up 2.9% on the day. Now, this stock does have a 16.8% short interest and was on our old squeeze radar, so watch this. I'd watch for 117, 170, 221, and then a high of 253 if things get squeezy. Nvidia, we called out for this pattern, and we did so far get the identical candle to what we had drawn out right here, coming up, retesting, coming back down, building a base. Where does this mean Nvidia is going to go? Well, it's likely going to have a day or two to try and fight this resistance at 139.50 and then ultimately trade sideways for a bit on Nvidia before any given move. It could even trade sideways all the way until their earnings on February 26th before gapping higher. Overall, guys, if you're not following me on X or Twitter or whatever you want to call it, make sure to go follow me. We are almost at 2K followers and I am active on there. I post on there very actively. If you're not in the Discord yet, it's a top link in the description. Come talk stocks with me on the daily and talk stocks and crypto with the most amazing people in there. We are getting a lot of new members. You will not regret it. Join for the new year of 2025. If you're not in any Discords, I don't blame you. I used to feel the same way, but it is very, very, very beneficial for your trading journey. The top two links in the description are for Discord, as well as one for Moomoo, which is a free broker where you can trade stocks and options on, but they are giving you level 2 order book data for free, access to shorting as well, viewing other exchanges, a customizable earnings calendar, market news that you are not going to want to miss, further option strikes, 8.1% APY on your invested cash. But most importantly, if you sign up and deposit through my link, which is the second link, they are going to start giving you free stocks up to 30 stocks, each valued up to $2,000 per stock. So make sure to go to that. Top two links in the description. That is it, guys. I love you all. God bless. Lottery Stocks out.